With the U.S. markets now closed for October 7, 2025, Tilray Brands, trading under the ticker TLRY, finished the session at a price of $1.72, marking a significant intraday gain of nearly 9%. This surge in a single trading day naturally grabs headlines and fuels a narrative of renewed optimism in the cannabis sector. The immediate expectation is that this is another ride on the speculative wave of U.S. legalization hopes. However, the reality of what's driving Tilray's current valuation is far more complex and arguably more compelling. While the prospect of legislative reform in the United States certainly casts a long and hopeful shadow, the more immediate and tangible drivers are rooted in the company's aggressive international expansion, particularly in Germany, and a diversification strategy into beverages that is quietly reshaping its revenue base, moving it far beyond the volatile world of pure-play cannabis producers. This is no longer just a bet on a single legislative outcome. It's a calculated construction of a global consumer brands company. The common belief surrounding Tilray stock, and indeed many of its peers, is that its fortunes are inextricably tied to the whims of Washington, D.C. For months, the stock has rallied on any hint of progress towards cannabis reform, creating a cycle of hype and subsequent disappointment. This expectation isn't entirely unfounded. The potential of the U.S. market is undeniably a massive catalyst. Yet to focus solely on this single uncertain variable is to miss the fundamental transformation happening within the company. The reality is that Tilray has been laying a much broader foundation. The recent surge to $1.72 wasn't just a reaction to abstract political chatter. It was buoyed by heavy trading volume, nearly double the daily average, suggesting a deeper conviction among some investors. This activity coincides with a crucial lead-up to their first quarter financial results, scheduled for release on October 9th. This earnings report is a critical moment of truth, a point where the company's strategic narrative will be tested by hard numbers. Many investors, particularly those using platforms like Fidelity, Robinhood, and SoFi for self-investing, are watching to see if the diversification strategy is translating into tangible financial improvements, especially after a fiscal year where the core cannabis business saw a decline in sales. Let's dissect the recent market movements. The nearly 9% intraday climb is significant, not just for its magnitude, but for its timing. It comes after a period of intense volatility. Just a week prior, the stock experienced a massive surge of over 60%, followed by a period of consolidation. This kind of price action is indicative of a stock at a crossroads. On one hand, you have traders and momentum investors, perhaps using platforms like interactive brokers for more advanced trading strategies, capitalizing on the political headlines. On the other, you have a growing cohort of long-term investors looking at the underlying business. Institutional activity provides a clue here. Recent filings show a mix of large funds both increasing and decreasing their positions, a classic sign of a divisive stock. For instance, Citadel Advisors significantly increased its stake, while other major holders have trimmed their positions. This divergence of opinion among sophisticated investors underscores the central tension. Is Tilray a speculative political play or a consumer packaged goods company in the making? For anyone considering an individual brokerage account to invest online, understanding this dynamic is crucial. The immediate focus for many is the upcoming earnings call. Analysts are forecasting a mixed bag. The consensus estimates for the quarter ending August 31, 2025 are closely watched. While the previous quarter saw its surprise earnings per share beat, revenue fell short of expectations. The critical metric to watch this time will be the performance of their beverage alcohol segment. Following the acquisition of 8 beer and beverage brands from Anheuser-Busch, Tilray has become a significant player in the U.S. craft beer market. This segment now provides a steady and, more importantly, federally legal revenue stream that is not subject to the same regulatory headaches as their cannabis operations. This diversification is a strategic hedge, a way to build a robust business that can thrive even if U.S. cannabis legalization stalls. The performance of these beverage brands will be a key indicator of management's ability to execute on this broader vision. Comment below with your revenue expectations for Tilray's beverage segment this quarter. Now let's address the core of the business, cannabis. While the diversification is a fascinating subplot, Tilray remains one of the largest cannabis companies in the world. The reality of the Canadian market, where it is a major player, has been challenging. Intense competition and pricing pressure have made profitability elusive for many producers. Tilray has responded by strategically de-emphasizing lower-margin products to protect its gross margin in the cannabis segment. But the real story in cannabis for Tilray is not in Canada, it's in Europe. The company has made a significant push into Germany, Europe's largest medical cannabis market. They have an EU GMP-certified cultivation and production facility in Neumünster, which allows them to produce and distribute medical cannabis products locally. This is a significant competitive advantage, as it insulates them them from the complexities and costs of importation. Recently, they announced the expansion of their premium craft cannabis portfolio in Germany, with 5 new cannabis flower products. This demonstrates a deep commitment to what is poised to be a major growth market. The German strategy is a prime example of expectation versus reality. The expectation might be that all international cannabis markets are years away from being meaningful. The reality is that Tilray is already building a strong, vertically integrated presence in a key European market, a fact that is often overlooked in the noise surrounding U.S. politics. This is the kind of detail that investors using services like Schwab Intelligent Portfolios, which often favor companies with strong fundamentals and a clear growth path, should be paying close attention to. Of course, no analysis of Tilray would be complete without a frank discussion of the risks. The company has a history of significant net losses, often driven by non-cash impairment charges related to acquisitions. While its debt-to-equity ratio is manageable, consistent profitability remains a primary concern for long-term investors. The upcoming earnings report will be a crucial test of their progress towards this goal. Furthermore, the U.S. political landscape, while a potential catalyst, is also a significant risk. The current federal shutdown has put cannabis reform efforts in limbo. While there is bipartisan support for some measures, the path to full federal legalization is far from clear. A failure to make meaningful progress on this front could lead to a significant pullback in the stock, as the speculative premium that is currently priced in evaporates. Investors need to be prepared for this volatility. For those managing their own portfolios through Fidelity Investments or similar platforms, this means having a clear investment thesis and a tolerance for risk. Looking ahead, the future of Tilray stock hinges on a few key factors. The most immediate is the upcoming earnings report. A strong performance, particularly from the beverage segment, and a clear path to profitability could send the stock significantly higher. Beyond that, the focus will shift back to the U.S. regulatory environment. Any concrete progress on cannabis reform will undoubtedly be a major tailwind for the stock. However, the long-term success of Tilray will ultimately be determined by its ability to execute on its global diversification strategy. The company's vision is to be a global consumer packaged goods company with a portfolio of brands that span cannabis, beer, and wellness. This is a bold and ambitious vision, but it is also a necessary one in a rapidly evolving market. The companies that succeed will be those that can build strong brands, manage their supply chains effectively, and navigate the complex regulatory landscapes of multiple countries. In conclusion, the recent surge in Tilray's stock price to $1.72 is more than just another speculative rally. While the expectation is that this is a simple bet on U.S. legalization, the reality is that there are deeper, more fundamental drivers at play. The company's strategic pivot to a diversified portfolio of consumer brands, its aggressive expansion into the European medical cannabis market, and its upcoming earnings report are all critical factors that investors should be watching. The tension between the short-term speculative fervor and the long-term strategic vision is what makes Tilray such a compelling and complex investment. The reality is that this is no longer just a cannabis company, it is a company in the midst of a significant transformation. Whether that transformation will be successful remains to be seen, but it is a story that is far more nuanced and interesting than the simple headlines might suggest.